You're about to discover something that most investors won't understand until it's too late. Right now, beneath the surface of daily market noise, a supply crisis is forming in silver. Not the kind that resolves itself with a minor price adjustment, the kind that redefines entire portfolios, shifts wealth between those who saw it coming and those who didn't, and exposes the fragility of assumptions everyone's been making for years. This isn't speculation. It's a structural reality unfolding in real time, and the clock is ticking faster than you think.
Before we dive deeper into what's happening and why it matters so urgently, if this kind of insight helps you see the markets from a different angle, hit that subscribe button right now.
You'll want to be here for the next analysis and alerts we're releasing. Trust me, what's coming will separate the prepared from the blindsided. So let's talk about silver. Most people think of it as just another commodity, something that goes up or down based on vague market sentiment or industrial demand cycles. But that view misses the entire picture. Silver isn't like other commodities. It occupies a unique space in the global economy. It's both an industrial necessity and a monetary hedge. That dual nature creates dynamics that don't exist anywhere else. And right now, those dynamics are converging in a way that's setting up one of the most significant supply shocks in modern history. Here's the thing. Supply chains don't collapse overnight. They degrade slowly, invisibly, until one day the system simply can't deliver what's needed. And silver's supply chain has been degrading for longer than most realize. Investment in new mines has been declining for years. Why? Because when silver prices were suppressed or stagnant, there was no financial incentive to develop new capacity. Exploration dried up. Projects were shelved. Older mines began depleting their reserves without replacements coming online. All of this happened quietly, while everyone assumed supply would always be there when needed. But demand has been moving in the opposite direction entirely, and not just incrementally, structurally. The world is in the middle of an energy transition. Solar panels require silver, electric vehicles require silver, 5G infrastructure, medical technology, defense systems, all of them need silver in quantities that are growing year over year. This isn't optional demand. It's hardwired into the technologies that governments and corporations have already committed to building. And here's the problem. The amount of silver needed for these applications is rising much faster than anyone anticipated when those commitments were made. Now, overlay that with something else, investor demand. For decades, people treated silver as a stepchild to gold, something to hold maybe, but not with the urgency or allocation they gave to gold. That's changing. As debt levels soar globally, as central banks continue creating money to manage unpayable obligations, as currencies lose credibility, investors are waking up to the fact that silver offers something gold doesn't: accessibility, a lower entry point, greater upside potential because of its smaller market size, and that dual industrial monetary profile we talked about. When investors start rotating into silver at scale, which they're beginning to do, it adds another massive layer of demand on top of the industrial baseline. So you have declining supply, surging industrial demand, and accelerating investment demand all happening at the same time. That's the setup for a supply crisis. But there's more, something most people don't see because they're not looking at the structure of the market itself. Most of the silver mined globally doesn't come from primary silver mines. It comes as a byproduct of mining other metals, mainly copper, lead, and zinc. That means silver supply is largely dictated by the economics of those other metals, not by the price of silver itself. If copper prices fall, if lead mining slows, silver production slows too, regardless of how high silver prices might be. You can't just flip a switch and produce more silver when demand spikes. The supply response is slow, constrained, and dependent on factors outside of silver's own market dynamics. That structural inflexibility is what makes this crisis different from a typical supply-demand imbalance. Here's where it gets more unsettling. Inventories, the visible stockpiles of silver, held in exchanges, vaults, and reported warehouses, have been declining, not gradually, sharply. Over the past few years, those inventories have dropped to levels that would have been unthinkable a decade ago. And yet, demand keeps rising. What that means is the buffer, the cushion that normally absorbs short-term mismatches between supply and demand, is vanishing. When inventories run low and demand exceeds production, prices don't just drift higher, they spike violently. Because once the buffer is gone, every incremental ounce of demand has to be met by pulling from somewhere else, and there's nowhere else to pull from. But the real kicker, the thing that transforms this from a problem into a full-blown crisis, is this. Most investors still don't own silver. Most portfolios are underallocated or completely absent of it. When the realization hits, when it becomes obvious that supply can't meet demand, when prices start moving in ways that grab headlines, there will be a rush, not a trickle, a flood of capital trying to get exposure all at once. And because the silver market is relatively small compared to other asset classes, that flood will overwhelm it. Prices will gap. Premiums will explode. Physical metal will become harder to acquire. And anyone who waited to act will find themselves paying multiples of what they could have paid just months earlier. You see, this is the nature of supply crises. They don't announce themselves politely. They arrive suddenly, even though the conditions for them were building over years. It's like watching a fault line. You know the pressure is accumulating. You know the plates are stuck. But you don't know the exact moment the earthquake will hit. What you do know is that when it does, the result is not proportional to the trigger. It's amplified, exponential, destructive to those unprepared. And here's something critical to understand. This isn't just about making money on a trade. This is about wealth preservation in an environment where currencies are being debased, where financial systems are stretched to their limits, where the old assumptions about what holds value are being tested. Silver, in that context, becomes more than an investment. It becomes insurance, a hedge against the failures of the paper system. And when a supply crisis hits, that insurance becomes priceless. Not because silver itself changed, but because everything around it did. Think about it this way. Imagine you're in a system where everyone relies on a resource, but that resource is running out. The early movers, the ones who secured their share before the shortage became obvious, they're fine. The late movers, the ones who waited for certainty, for proof, for everyone else to validate their decision, they're scrambling. And they're paying exponentially more for a fraction of what they need. That's the difference between acting when the signals are clear versus waiting until the crisis is undeniable. One group thrives, the other survives, barely. Now, let's talk about the macro backdrop, because it's not incidental, it's central. We're living in a world where debt has reached levels that are mathematically impossible to repay in real terms. Governments are running deficits that dwarf their revenues. Central banks are trapped. They can't raise rates too high without breaking the system, but they can't keep rates too low without fueling inflation and destroying currency. Credibility. This is the end game of a long-term debt cycle. And in such end games, hard assets, tangible assets, things that can't be printed or promised into existence, they become the refuge. Silver fits that profile perfectly. It's real, it's finite, and it's globally recognized. But the macro backdrop does something else too. It accelerates demand from investors who are no longer just looking for returns. They're looking for safety, for optionality, for something that protects them when the paper system falters. That's why central banks have been buying gold at record rates. That's why individuals are increasingly turning to precious metals. And silver, being more accessible and having that industrial demand floor, offers a compelling combination of safety and upside that few assets can match. Here's another layer: geopolitical instability, trade tensions, conflicts, sanctions. All of these create supply chain vulnerabilities. Silver doesn't exist in a vacuum. It's mined, refined, transported, and stored across multiple countries. When geopolitical risks rise, the reliability of those supply chains comes into question. What happens if a major producing country faces unrest? What happens if trade routes are disrupted? What happens if export restrictions are imposed for national security reasons? Each of these scenarios reduces available supply even further, and each makes the crisis more acute. And yet, despite all of this, despite the declining inventories, the structural supply constraints, the surging demand, the macro instability, most people are still not paying attention. They're focused on stocks, on bonds, on real estate, on the same assets everyone always focuses on. They're not asking the uncomfortable questions. They're not stress testing their assumptions. They're not positioning for what happens when the system they've taken for granted starts showing cracks. That complacency is the opportunity for those who are awake. But it's also the danger, because when complacency breaks, it breaks fast. Let me give you a historical parallel. In the 1,970 seconds, the world went through a similar moment. Monetary instability, inflation, energy crises, geopolitical shocks. During that decade, silver went from under $2 an ounce to nearly $50. Not over decades, over a few years. And the move wasn't smooth. It was volatile, shocking, and it caught the vast majority completely off guard. Those who held silver before the surge did extraordinarily well. Those who chased it after the move started paid peak prices and often got burned. The lesson is clear. Position early. Don't wait for confirmation. By the time everyone sees it, the asymmetry is gone. What we're facing now has eerie similarities to that period. Debt is higher. Monetary expansion is more extreme. Industrial demand for silver is far greater because of technology. And the supply side is weaker, not stronger. The ingredients for a repeat or something even more dramatic are all in place. The only question is timing. And while no one can predict the exact moment, the trajectory is unmistakable. Now, let's address something important. This content is educational and not financial advice. The goal here is to help you think with greater clarity about your decisions, to see patterns and risks that aren't being discussed in mainstream narratives. What you do with that information is your choice. But make it an informed choice, not one driven by inertia or fear. So what does all of this mean practically? It means that owning silver, real physical silver, is no longer just about speculation or portfolio diversification. It's about positioning for a structural shift. A shift where supply can't keep up, where demand is relentless, and where price becomes the only mechanism to ration what's left. In such an environment, those who own the metal are protected. Those who don't are exposed. But there's a nuance here. Not all silver is created equal in a supply crisis. Paper silver, ETFs, futures contracts, these are claims on silver. They're not the metal itself. In a genuine shortage, the gap between paper and physical widens. Premiums explode. Delivery times stretch. Counterparty risks emerge. The people holding actual coins, actual bars, they have the power. They have the asset. Everyone else has a promise. And promises, as history shows, can fail when the system is under stress. This is why the focus should be on physical ownership, holding it yourself or in a secure, allocated form where you have direct claim, not a pooled structure, not a synthetic exposure, real metal. Because when the crisis hits, and it will, the distinction between owning the asset and owning a claim on the asset will be everything. It's the difference between security and vulnerability, between control and dependency. And here's the thing about supply crises. They don't resolve quickly. Once they begin, they tend to persist because fixing them requires time. New mines take years to develop. Production ramp-ups require capital, permitting, infrastructure. Meanwhile, demand doesn't wait. It keeps pressing. That mismatch can last for years, not months, which means the opportunity for those positioned early isn't a brief spike. It's a sustained repricing, a fundamental revaluation of what the asset is worth in a world where it's scarce and essential. Think about what that means for wealth building. You're not betting on a short-term trade. You're positioning for a multi-year shift in the value of a critical resource. The risk-reward in such a setup is asymmetric. Your downside is limited. Silver isn't going to zero. It has intrinsic value, industrial demand, and monetary history. But your upside, that's where the asymmetry lives. Because if the supply crisis unfolds, as the fundamentals suggest, the upside isn't incremental. It's exponential. Now, let's talk about urgency. Because this isn't a story you can come back to in 6 months and expect the same opportunity. The conditions are accelerating. Inventories are falling. Demand is rising. Investors are starting to wake up. Every week that passes, more people connect the dots. More capital flows in. Premiums tick higher. Availability tightens. The window to position advantageously is not infinite. It's closing. Not because of hype, because of math, because of supply and demand realities that don't care about sentiment or timing preferences. Here's a principle that applies across all markets. The best opportunities exist in the space between when the fundamentals are clear and when the crowd acts on them. If you wait for everyone to see it, you're too late. If you act before the fundamentals are clear, you're speculating. But when the fundamentals are clear and the crowd is still distracted, that's the sweet spot. That's where fortunes are made. And right now, with silver, we're in that sweet spot. The fundamentals are screaming, but the crowd is still debating, hesitating, or simply unaware. Let's also address the psychology of this. Most people hate acting before consensus. It feels risky. It feels lonely. They want validation. They want to see others moving first. But that instinct, while natural, is wealth-destroying in moments like this. By the time you have consensus, by the time everyone agrees, the opportunity is gone. Prices have adjusted. The asymmetry has evaporated. What felt safe, waiting for confirmation, turns out to be the riskiest move of all, because you missed the window. Contrarian positioning isn't about being different for the sake of it. It's about recognizing that markets reward those who act on information before it becomes common knowledge. It's about having the courage to trust your analysis even when the crowd hasn't caught up yet. And in the case of silver, the analysis is not ambiguous. The supply is constrained. The demand is surging. The inventories are depleting. The macro backdrop is supportive. The only thing missing is mass awareness. And when that awareness arrives, the move will be violent. There's also something to be said about optionality. Owning silver gives you options that others won't have. If the crisis unfolds, you benefit directly. If inflation accelerates, silver benefits. If geopolitical risks spike, silver benefits. If industrial demand surprises to the upside, silver benefits. If investors panic out of paper assets, silver benefits. You're not betting on one scenario. You're positioned across multiple scenarios, all of which point in the same direction. That's not speculation. That's strategic positioning. And here's the deeper truth. Wealth isn't built by following the herd. It's built by seeing what's coming before others do and acting decisively. Every major wealth transfer in history has occurred when a few people recognized a structural shift early and positioned accordingly, while the majority remained anchored to old assumptions. This is one of those moments. The shift is happening. The structure is breaking. The question is whether you'll be among the few who positioned early or among the many who will scramble later. Let me paint a picture of what the scramble looks like. Prices are spiking. Headlines are everywhere. Everyone suddenly wants silver. Dealers are sold out. Online inventories are depleted. Premiums are 50, 70, 100% above spot. Wait times for delivery are measured in months, not days. And you're trying to buy, along with millions of others, all at the same time. That's chaos. That's panic. That's the environment where decisions are made poorly, where you overpay, where you can't even get what you want. Compare that to acting now, when premiums are reasonable, availability is decent, and you can accumulate calmly, methodically, without competing against the stampede. The contrast couldn't be starker. One path is strategic, the other is reactive. One builds wealth, the other protects you, barely, at inflated cost. The difference between them is simply timing. And right now, you still have time. But that window is narrowing with every passing week. Now, let's bring this full circle. The supply crisis in silver is not a hypothetical risk. It's an unfolding reality. The data is clear. The trends are undeniable. And the implications are profound, not just for silver investors, but for anyone who holds wealth in a system where currencies are being debased and trust is eroding. Silver offers a way out, a hedge, a refuge. And in a supply crisis, it offers something even rarer, genuine scarcity in a world that prints money without limit. This is not about predicting the future perfectly. It's about preparing for it intelligently. It's about recognizing that the odds are skewed, that the setup is extraordinary, and that acting early is the only rational response. Those who wait for certainty will find none. They'll find only higher prices, lower availability, and diminished opportunity. Those who act now, while the fundamentals are clear but the crowd is distracted, they'll look back on this moment as the turning point. So here's what you need to understand. The supply crisis in silver is coming, not because of a single catalyst, but because of a convergence of structural forces that have been building for years. The production shortfall, the industrial demand surge, the investor awakening, the inventory depletion, the macro instability. Each one alone would be significant. Together, they're creating a perfect storm. And when that storm hits, it will redefine the value of silver in ways most people can't imagine right now. Your move is simple. Own the metal, physical, real, in your possession or securely allocated. Don't rely on paper promises. Don't wait for validation. Don't assume the opportunity will still be there when you're ready. Act now with clarity, with conviction, and with the understanding that what you're doing isn't speculation, it's preparation. Preparation for a world where the assumptions everyone takes for granted no longer hold, where supply can't meet demand, where currency loses credibility, where tangible assets become the foundation of wealth. The supply crisis in silver is not a future event. It's already here, unfolding in slow motion, visible to those who are paying attention. The only question is whether you'll be positioned for it or caught off guard by it. The clock is ticking, the fundamentals are screaming, and the opportunity, while still present, is fading fast. This is your alert. This is your moment. What you do with it will determine where you stand when the crisis becomes undeniable to everyone else. Don't let this be the one you look back on with regret. Act now.